What's up guys, Ben here and welcome to Motivation to Invest. Ethics and investing. These are two things which seem like polar opposites but are now increasingly becoming more related from a social aspect and surprisingly from a performance aspect. So the question is, can you invest ethically for a better world and still achieve great investment returns? Well, this brings me neatly onto ESG funds. So ESG stands for environmental, social and governance. These are three central factors in measuring the sustainability and societal impact of an investment. So I know you guys are probably thinking, okay, I don't mind avoiding oil and tobacco companies, but what about avoiding these companies which focus solely on making profits and are not distracted by any ethical concerns? Shouldn't these companies make more than the good guys? Well, surprisingly, no. It's actually been proven from multiple studies that companies with a strong environmental, social and governance policy tend to do better than those without. Diving into the performance of the top ESG funds, we can see that ESG funds actually have outperformed non-ESG funds over the past few years. And that gap in performance is getting larger and larger every single year. Why are ethically minded companies performing much better than those that aren't ethically minded? Well, that's for a few surprising reasons, and I'm going to outline those in this video. In part one of this video, I'm going to outline my 3 reasons why ESG funds are actually outperforming many other funds and may continue to do so in the future. And then in part 2 of this video, I'm going to reveal my top 3 ESG funds and why they may be a great investment for you guys. So if you're ready for that, let's dive in. Right guys, before we get started, if you appreciate the value in videos like this, then feel free to give the video a big thumbs up. That really helps out tremendously with the YouTube AI. And if you're new around here, feel free to hit that subscribe button and join the community. And be sure to turn the notification bell on. That way you won't miss out when I release future videos on investing tips and stock picks, which I'm personally investing into. With that being said, let's get into it. So reason number 3 why these ESG funds are outperforming many others, and that is due to their concentration of big tech. So it turns out the majority of ESG funds actually have a large concentration of tech, which has outperformed the market in recent years. We have companies such as Alphabet, the parent company of Google, which has an internal rule which says don't be evil. And then we have companies like Tesla, which has been one of the best performing stocks. And since 2019, that stock is up by over 500%. So that means if you would have invested £10,000, you would have at least £50,000 from that investment. So Tesla's mission statement is to accelerate the world's transition to sustainable energy by building not only electric vehicles, but also infinitely scalable clean energy generation and storage products. So from solar roofs to Tesla's Powerwall. So that's on the positive side, and these ESG funds are taking advantage of these disruptive technology companies which are improving people's lives. But what about on the negative side? Well, that brings me neatly onto reason number 2, and that is climate change. In the words of the CEO of Tesla, Elon Musk, you get paid in proportion to the magnitude of the problems that you can solve. And climate change is definitely one of the largest and most difficult problems to solve, which we all need to solve for humanity. According to this chart by NASA, atmospheric CO2 levels have never been above this line until now. We've also seen global temperatures rise, warming oceans and melting ice caps. So you may be thinking, so what? Aren't cold countries just going to get better summers? Well, not exactly. Things could get much more extreme. So according to NASA, the potential future effects of global climate change include more frequent wildfires, longer periods of drought in some regions, and an increase in the number, duration, and intensity of tropical storms. Thus, like any large-scale problem, investment is pouring in to solve it. Because where there's problems, there's profit. And this brings me on to reason number 3 why ESG funds are outperforming the broader market, and that is due to the acceleration in sustainable investing. So the global health crisis has accelerated this trend, and ESG funds have seen a massive boost in share value, with ESG index funds hitting a record $250 billion. And during the second quarter, 56% of sustainable funds ranked in the top half of their Morningstar category. And year to date, that number jumps to 72%. According to Alex Bryan, Morningstar's director of passive invested strategies, There's a great realization today that ESG issues are investment issues. They're issues that can affect the bottom line, and that may not always be something that comes to bear immediately, but it's something that I think more people are starting to understand is aligned with shareholder value maximization. And according to JP Morgan, the rebound in civil society has been impressive, with an increase in volunteering, social cohesion, and community support, and focus on public good versus private freedoms. We see the global health crisis accelerating the trend to ESG investment. Many businesses are also given an ESG rating by themselves and by external analysts who use this ESG rating to decide whether to invest into the stock. According to an ESG survey, the share of global investors applying ESG criteria to at least 1/4 of their total investments was 48% in 2017. And this jumped to a massive 75% in 2019. Thus, it makes sense for businesses to start aligning their business goals with improving the world. Some highly successful companies have even built their entire value proposition on doing good for the world, such as Tom's Shoes. This company has made a pledge to donate 1 pair of shoes to someone in need for every pair you purchase. Even companies which are stated to look after their employees more by offering flexible working and home working are also given a higher ESG rating. So overall, the future looks bright for ethical investing. It's going to improve people's lives, improve the world, and also improve profits for shareholders. So at the end of the day, guys, there's no better feeling than improving the world and actually helping people. So now let's dive into my top 3 ESG funds. I'm going to look at the expense ratio, the past performance, and also, most importantly, the top 10 holdings. That way you guys can look at the funds, but you can also, if you wish, cherry pick your favorite stocks out and invest in them individually completely for free. And if you wish to invest into stocks or any of the funds mentioned in this video, then feel free to sign up to eToro. These are a channel sponsor. I'll leave a link in the description below. They offer a variety of unique advantages over many other platforms. Firstly, the platform is completely free for you to use and for you to invest with. Second, they have a wide variety of stocks, ETFs, and funds, which allow you to invest in them simply. Third, they have copy portfolio, where you can actually copy successful traders' portfolios easy. And finally, my fourth reason why I do like eToro is they also offer crypto trading. So if you wish to invest into Bitcoin or any of these cryptocurrencies, you can do it all on eToro. So eToro is a great platform. It's also a great community and a very social platform, as you can discuss with people and you can read the news feed which people update daily. So if you're saying, Ben, I would love to sign up to eToro and take advantage of all these features and support the channel, but I'm already a member of this broker and this broker and this broker. To me personally, I've actually been diversifying my account and my portfolio. I'm actually a member of around 4 brokers right now, and I've got stocks in each one. And believe me, it's good to diversify. Recently, there was a major Robinhood hack and many people lost a lot of money. I'm not trying to put the fear in anyone, as the majority of these investment brokers are protected by the financial authority, up to around £85,000. I believe that's in the UK. I'm sure US has similar thresholds. But still, it's good to diversify your stocks across a number of different brokers and also take advantage, because certain brokers have some stocks which others don't. So feel free to check it out. I'll leave a link for it in the description below. Kicking things off at number 3 is the Aegon Sustainable Equity Fund. So diving into the performance of the fund, we can see it has a 3-month return of 12%, 6-month return of 30%, 1 year 48%, and 3 year of over 75% return on your investment, which is fantastic. And as you can see, it's outperformed their global fund massively. So how much does this fund actually cost? Well, there are quite a few fees here. So you've got an ongoing charges fee of 0.89%. So that is quite high. You've also got AMC, 0.75%. However, there is no performance fee, which is great. So what are the top 10 holdings of this fund? Well, we've got quite a few technology companies in here. So first we can see Keyence Corp. So Keyence Corp is a direct sales organization, automation sensors, vision systems, barcode readers, laser markers, measuring instruments, and digital microscopes. So quite an interesting company there. We can also see Tesla down there. We all know Tesla. Bandwidth, which is an interesting communications platform as a service company. They sell software application programming interfaces for voice messaging using their own IP voice network. Now, if that sounds like gibberish to you, just know that software as a service businesses tend to have higher margins, thus can be great investments. But obviously, there needs to be a deep dive into each of those stocks if you wish to invest into them. Another interesting one we can see is Plug Power. So Plug Power, I definitely might be doing a video on this very soon. Plug Power is an American company engaged in the development of hydrogen fuel cell systems that replace conventional batteries in equipment and vehicles powered by electricity. Right guys, so on to my second ESG fund, and that is the MFS Value Fund. This one is great for value investors. So looking at the performance of this fund, we can see it actually hasn't done too well compared to the previous fund, which is more a technology fund. So this one, 4.3% return in 1 year, 6.84% for a year, 8.72% in 5 years, 10% in 10 years. So it's not an incredible return, but a lot of value stocks tend to have less risk. So maybe that is taking into account the lesser risk. But let's dive in to the expense ratio. So total expense ratio is 0.82%. That's your yearly expense ratio. However, there's also a front load expense ratio. So that's what you have to pay as soon as you invest into the fund, 5.75%, which is quite high. Let's look at their holdings real quick. So companies here, Johnson & Johnson. Now that is a great company in terms of dividends. It's a large cap business. You've got JP Morgan, Comcast. So you can see a lot of banks in here. There's actually a few scientific companies here. Pfizer's in here. Recently released the V-Shot, Abbott Labs, Citigroup. But a lot of the financial companies here have been some of those which have been massively hit in the recent years. And thus, I do suspect that that's an indication of the fund's poor performance. Fund number one is the Legg Mason Clearbridge US Equity Sustainable Leaders Fund. Now that's quite a long title, but let's see if this fund can back up the talk. So fund's performance around 20% in 2019 to 2020. Entry charge of 5%, so that's quite a high entry charge again, and the ongoing charge of 1.68%, which is also quite high. But let's see if this fund can back up their high charges. Well, we've got Microsoft Corp is in the top 10 holding. That is a great company. Apple, another great company. Costco, Alphabet, Home Depot, SolarEdge Technologies, Nike. So if you don't wish to pay that massive fee, then simply invest into these stocks individually. But obviously you won't get the benefit of their trading. But that's today's video, guys. I hope you enjoyed it. I hope you found that valuable. I'd love to know your thoughts on sustainable investing, on ethical investing, on ESG funds and ESG stocks. Comment below. Do you think investing ethically is the way forward, not just for the planet, not just to help people, but also to help your investing profits? Then let me know in the comments below and I'll join in that discussion down there. And also, if you do appreciate this video, then feel free to give it a big thumbs up. That really helps out tremendously with the YouTube AI. And if you want more investing tips and exclusive stock market picks, which I'm personally investing into, then definitely subscribe to this channel and make sure you hit that notification bell. Make sure that notification bell is on. That way you won't miss out on any future stock picks, which I'm personally investing into. Some which have skyrocketed by over 500% this year. So you don't want to miss out, guys. You want to get in there as early as possible. With that being said, I hope you guys have an incredible day and I'll see you in my next video. Invest safe.